Listen, there comes a time and a place where everybody wants to make a change. You're probably tired of where you're at. You probably want more in life. You've probably seen all the YouTube videos on everything you can do, from drop shipping to reselling online, which is the same thing. Drops, aka like shoes, clothing, trucking, the online apps like Amazon and all those other ones. Affiliate marketing, copywriting, door-to-door sales. You're trying to figure out something to do, something outside of your normal 9 to 5 or 8 to 5, whatever. There's a lot of things. Obviously, you can see like what's going on right now with all the meme coins and Bitcoin and crypto in general. What am I gonna do? What's next? I've done most of those, if not all of those. Even with the stuff that I'm doing right now, cybersecurity, tech sales, been there, done that. I was normally getting my degree in cybersecurity, computer science, went down computer engineering, fell in love with real estate. So ever since 2014, when I first got my license up until today, right now, I've been doing a bunch of real estate, and still that ain't been my main income. But it's something that I like because it was hard for me to ever even try to get a job. I always want to run things, tell the manager what to do, tell the teacher what to do, why you're wrong, why you're not wrong. So I get it. You want to find something where you can have that free time, that freedom to still work from anywhere, do something that's an actual career, you actually making money. But there's a big thing. There's one that you probably already know about that you see all the time. Day trading, investing. They call it get rich quick, which that ain't how it goes, but it is what it is, right? Either way, it don't just happen overnight. It may take a month, it may take a year, you may quit. Only 99% of people can succeed, and that's because 99% of people just quit. When you get a job, you quit. When you don't like something, you quit. When you finally do like something, you just keep doing it and doing it until you get good. And most people, when they finally meet you or see you doing what you like and what you're good at, they gonna think it came natural to you. They gonna think you just started and boom, rich. You already know what you're doing. You're self-made. No, that's not how it happens. Either way, whether you take it from me, take it from other YouTubers, there's a way for this to work. Who am I? Well, YouTube channels called Trade Bars. Discord, some people call me TB. Some people call me Bars. Nobody outside of social media ever calls me any of those things. They call me by Carlton. That's my name. That's the name I've been going by my whole life, obviously. Well, not the nicknames that other people give me. KT, or just C in general, because Carlton, that's kind of long in general. But like I said, I'm in real estate investor, realtor, own a few properties, property management. Obviously, they all know me by Carlton. Outside of social media, that's my name. You'll be able to call me that once you get to know me. For now, call me whatever you like. Just don't call me dumb. I'm just playing. Like I said, been doing real estate for a hell of a long time. I'll tell you guys all about it. Everything I know real estate like the back of my hand, no matter where it's at in the country. It's all the same. It's all pricing. Guess what relates to that? Investing. Or what we're going to be talking about, day trading or trading in general. It's all just pricing. It's all up and down. It's all market manipulation. It's all cycles. It doesn't matter if it's crypto, if it's generational stocks or institutional stocks, whatever you want to call them, just traditional stocks in general, or the actual real estate market. Either way, everybody's always looking for some kind of side hustle or some kind of other basket to where they can create some wealth for themselves, for whoever and whomever, whatever. Anyways, you know what I'm trying to say. Now I'm doing my newest one, which is content creation, because I got a wealth of knowledge. I've made a shit ton of money and I've lost a shit ton of money. Now I'm gonna do it all back at the same time while I'm while I'm going through my journey with you guys. Full disclosure, I'm brand new to content creation. This is one of my first videos, so they're gonna be crappy. They're gonna suck until they get better and better and better. Because I do love the documentary style, so I don't know how to incorporate that with at least the trading stuff. Real estate, that's easy. So you guys will get to come with me when I'm out there looking at properties, when I'm looking at investment properties, potential flips, when I'm making my phone calls. I'll go ahead and record me talking to homeowners, talking to potential buyers, or talking to people in general about real estate, going to investor meetups, coming with me to the office. You know, I'll just take my camera around with me. Why not? Trading. What do I know about it? I know a lot about it. Naturally, you know, I've always been an investor ever since my first stock that I bought when I was in high school, about 14, going on 15 years old. I bought Apple, bought a little bit of Tesla, and just forgot about it. You know, added to different, you know, stocks here and there as I was growing up, but mainly just throwing stuff into the S&P 500 every now and then when I actually can remember. So I've been around investment my whole life, and I think I mainly got that from my grandmother who owned her own business. And every time I was with her, we just, you know, chat about random things. She'll talk about having a savings and how she has to do it on her own because she doesn't have a 401k. So that kind of got me intrigued in what to actually do with financing. What does my daughter do? I only recently started actively getting into, you know, buying and selling. And by recently, I mean 2019. And even then, I was mainly just swing trading. Focus on real estate, put a couple $1,000s into this stock, sell it 2-3 months later when Jerome Powell talks about something and either it shoots up, I sell, or it shoots down, I'll buy and wait till the next month to resell again when he says something again about interest rates. Because mainly I'm only concerned about those since I was focused on real estate and interest rates played a big deal, as you probably know. So that's swing trading. Buy, sell, and to me, swing trading, I'm probably gonna hold it anywhere from a month to 3 months. Just depends on when I can remember. And I'm not buying just anything. I'm buying mainly things that I already wear, like Apple, because I use that for my phone. I'm using an iPad right now. Nike, Adidas, well, because of Yeezys. Things like that. Tesla, because the car I drive. That's about it. And then the S&P 500, and then I'll resell it months, buy it back again, resell it, buy it back again. Mainly just trading like that. Got into options, got into binary options. Some worked out, some didn't. And then like 2023-ish, got into crypto, turned $2,000 into 6 figures, which I'll try to log in, but KuCoin, they don't let anybody log in. Even when I use a VPN, it says my account's frozen just because I'm in the US and I've logged in so many times using VPN, I just don't know. But I'll figure out some way to show you guys that how I made it. And this was all within 2-3 months ish. So I was hooked ever since then. And then we'll get into that later. But in general, day trading, I'm gonna try to take it from start to finish, what I know and how I'm being profitable right now and what I'm even doing right now, only using a little bit of money and leveraging that to make it more. Yeah, so yeah. All right, so first thing we're talking about is the platform that everybody uses. And when I mean platform, I'm talking about what you're gonna use to chart. You don't, well, you can. I'm not gonna say what you shouldn't and what you shouldn't do. Just find what works for you. But naturally, whatever I'm trading on, I don't chart on there. And by chart, I mean where you're gonna mark up your highs, your lows, whatever your strategy is. Most people refer to that as charting. I like to keep things simple. Yes, I do know what a lot of terms are, but I'm gonna keep it simple. I'll leave it up to you to, you know, go anywhere else to figure out what you want to call a high, what you want to call a low, supply, demand, resistance, you know, all that stuff. Regardless, I'm gonna just tell you how I think about it, and if it's simple to you, keep it that way. If you want to make it more technical, do that on your own, and maybe ask me something in comments and I'll respond there. But either way, find what works for you. I'm just gonna, you know, keep it simple, or what is the KISS? We're gonna go through the KISS method, and we're just gonna do it that way. So for now, here's the first thing you want to look at, which is called Trading View. This is where everybody brings up the charts. You know, whether you actually use it, whether you trade with it, which you can trade on here. Yes, I trade on here as well, and I also trade on other platforms. I have multiple platforms that I'm using between crypto, futures, my long-term options, and day trading. So first thing you want to do is go ahead and click Get Started. And For convenient purposes, everything that we're going to go through today, it'll be the first links within the description, so you can just go through that. Some of them are affiliate links. Like I told you, I'm going to take you through my process, try to keep everything as free as possible for you. Yes, if you do click on something, it may be an affiliate link, and yes, it still may be free or very, very inexpensive. So again, you click get started, you're going to log in. I already got a login and everything, so sign up for $0. And then I'm just going to use my Gmail. Paid version is no different besides when you get real technical. And boom. It's the first thing. This is Bitcoin right now. This is the weekend. So mainly what I trade is the indices. Things that only go up. Things that your mom, you, your grandparents have their 401k in, have they long-term investments in, because they don't know what they're doing. You know, they go to Fidelity, Vanguard, and Vanguard puts them into whatever they want to call that fund. Usually it all comes back to the S&P 500, which is this one right here. Again, historically, I like things that only go up. Why not day trade something that only goes up? Yes, we're scalping. Yes, we're getting in and out. So, of course, there's going to be big downturns. In the long run, it goes up. Why not practice with something like that? Now, don't be overwhelmed. There's a lot that goes into this. This is just what we're doing our charting. You know, I already told you what I like to trade, which is the S&P 500. Now, technically, it's the futures. We're not going to get into detail about all that. It takes a lot of margin, aka a lot of money, to even open up a brokerage account. I'm going to show you how to get started with very, very little money, which is something called CFDs. Of course, I'll explain it. This is already going to be an extremely long video. Maybe I'll get to it towards the end when it comes up again. Regardless, for now, we're going to get you something at least to get started on. I'm not going to drop you right into crypto, because exchanging your USD into USDT is a little bit too much right now. So the closest thing I can do for you is a CFD. Then we'll get into futures. I'll show you platforms I'm using for the longer term, you know, very, very trusted platforms where people's 401ks are, IRAs are. But like I said, you know, let's just Google something. So type in trading platforms, you'll get all these different places, all these different, you know, links. Investopia, all these bloggers that's gonna show you where you can get started. Again, none of these are non-regulated brokers, so they're gonna go by US regulations, which is not easy to even get started within for somebody who has $200, $300. Just gonna be, you know, it's possible. I always recommend starting that way outside of doing a paper account or a demo account, which we're going to set you up on a demo account right now. So the first one that I can recommend that I've had for a while, that's still up and running, that hasn't taken anybody's money, which is this one, HeroFX. Say what you will about it, do your own YouTube on about it. There's pluses and minuses with everything. It's not regulated, but that's the only way you can get started with a small amount of money. Again, we're going to go through what's regulated and what's not regulated. If you're getting into crypto, you should already know that regulations shouldn't scare you off. Regulations is how the big boys, the institutions, keep you down. And yes, I said it like that on purpose. Take it for what you will. If you ain't vibing with me, maybe this ain't gonna be for you, because we ain't about the system. We learn how to use the system for our gains. So sign up for free again. I got affiliate links. They're the first thing you're gonna see in the description. If you want to, please click on them. It's gonna bring you right here. You're not gonna go to no scam website, but you know, you sign up for free. It might already have me logged in. Yeah, it already has me logged in, but either way, when you click on sign up, you know, do the normal stuff with every sign up. Your name, email, you'll get the email. You're gonna log in, and when you first log in, it's gonna look something like this. What you're gonna go do is you're gonna go to this platform. You're gonna open up a demo account. It's right under accounts right here. You go to a demo account. You can do demo 0, which says right there, a demo account with the Trade Locker platform, which is what we're going to be using, with low spreads and 0 commission. Or you can get in raw dog. You know, nobody likes to get in raw with anything, so just ignore that one for now. It has to deal with fixed commissions and raw spreads, which if you're doing a lot of trading, those commissions going to add up. If you're doing quick, you know, scalps, you know, the spreads, they're not going to be like 1 second in, 1 second out, because you got to get past that spread, which is almost the same as a commission. But sometimes it's better just start with the spreads, so that way you can do what I'm going to teach you, which is, you know, how to go for at least a 1-to-1 where it's not going to be a quick scalp. Scalping, I'm still new, but it's still the same thing as what I do now. So just keep it, you know, for short and kiss. You know, we're just going to do it this way. You click create account. You didn't have to click on that, but that's the agreement to what you're actually signing up to. And then obviously you got to deposit. Now this is demo money, so you know you can deposit a hell of a lot of money. Only reason why we're gonna do $2,000 is for a reason that we're gonna get into later, when it has to come to using firms and using other people's money. So I always suggest using a demo account with $2,000, because when you do have your first $100 that you're going to want to start practicing with, you're going to want to leverage it to where that $100 equals $2,000. So why not start your demo account with $2,000, so you know how to go in with the $3 and risk, you know, $3 to make $6, which is a 1 to 2, or $3 to make $3, which is a 1 to 1. You know, click deposit. So you're gonna create your email. I mean, you already have your email. You already got your password. Make sure you check your email. It came directly from HeroFX, from the Trade Locker platform, or technically they're called brokerages. So let me just call them that, from this brokerage, which was HeroFX, to get onto your trading platform, which is Trade Locker. You put in the email that you set up everything with. They sent you a password, and the server is HeroFX, and you click login. So same thing, kind of like TradingView, which you can see a little logo right here. All these platforms, they mainly integrate TradingView into their platforms. But again, you can chart on here directly where you're going to be trading from, but you might be on a phone, so still make sure you keep TradingView in mind. And plus, that has everything that you're probably going to be interested in trading in all on one thing. This may not have everything. You know, this does have a lot, which is cryptos, energies, forex, majors, all the forex pairs, indices, which is what we focus on, mini indices, which is what you're probably going to start with. If you only have even $50, you can use mini indices, metals, and stocks. So again, same thing. This is a demo, buy, sell. The one thing I do like about this one, so let's say you're gonna do a pending order, which is, you know, you want to get in at a particular point, you want to get out at a particular point. Market orders means I want to get in now, I don't care what the cost is. But this is all visual. So let's say you want to get in right here, take profit, stop loss, which we're definitely going to talk about those. Stop loss, let's say under these lows. Oops. Everything's so close together. Oh, I'm on 4 hour. All right, so take profits. Let's say you want to do these most recent highs. Stop loss, these most recent lows, and you're gonna get in, you know, right here on this retrace. See, I wasn't gonna do that trade because look, it's a negative, you know, 1 to 2, lose, risking 200 to make $60. Yeah, we don't like that, but just to give you, you know, a point of view, it's visual. So you risking 200 to make 400. Don't know why you're doing it. You're just doing whatever. I mean, you can do a market order, which is the same thing. You can do your stop losses, take profit. Boom, I'm getting in right now. Market order. We're in. We already started -$6 because of spread, which it shows you all the spreads right here. And this is Bitcoin, so all spreads are different depending on the asset that you're trading. So got in on a downtrend, maybe, it's kind of a little supply zone right here. But yeah, you can get in as many times as you can afford. So with CFDs, they do everything by lots. Again, we can use a calculator, but luckily with this platform, it tells you exactly how much you're risking with a lot. A 0.2 or a 0.2 is equivalent to $500. Now, this is leverage. This is actually 500x leverage. So that $500 of your real money is leveraged up to $17,000 in exposure. Remember what I told you about that $2,000 we're practicing with? You're way over $2,000. So let's zero this out. And there you go. 0.01 lot is $25 or 1% of your $2,000, which is where we want to be. Now, this $25 that you just went in with is equivalent to $800. You're done. You're good. That's all you're going to risk. You're going to do your stop losses and you take profits based off of that, which I need to edit it so I can show you. Again, I'm explaining this. I'm just showing you how this platform works. So with this one, we're down 26 cents. Not a lot. But let's do a take profit. So we got in actually right here. So this is the spread. Right now, the spread is juicy. We're at 86,000 and some change is moving right now. But you don't get in up here where this line is at, if you can see that. That's the spread difference. That's how this brokerage is going to make their money. So keep that in mind. That's why I said it's not going to be good for scalping doing this. At least quick scalps. Technically what we're doing right now is still a scalp. But let's say you're going to do this. So same thing, take profit. We're going to risk 86 cents to make, that's my daughter, 90 cents. So this most recent high. So swing high to the swing low, put it under this low, risking 77 cents to make 95 cents, which we probably already gonna get stopped out. But that's it. So blind trade, just to show you that everything is visual with these ones. Yeah. Oh. So that's the two platforms we're gonna focus on for now. Again, so one thing I did forget to show you was how to get out the position so you can do partials, which right now we're at 0.02, so half of that, 0.01, and you close. Now you closed out half. So it was at 17,000 before, now we're at 8,000 and some change. Whatever that says, and then hit the X to close the whole position, and now we're out. And what we lose? $70. So just to recap, market order, pending order. We're gonna stick with market order. You look at how much you're risking, which is right here. So again, we'll show you how to use a calculator if you're not gonna use this platform, but let's just zero it out. I'm not going to tell you how much to risk, but ideally you're going to risk the amount of trades that you need to make to survive. So let's say you do that 1% rule and you do 100 trades. That's why they do 1%, because they going to have 100 trades. After 100%, you ain't got no more money. You risk 1% at a time, you do 100 trades. You risk 10%, 10 trades. Oh, yeah, so the recap, got a little sidetrack. Buy. Now you in. This one shows you how much your exposure is $858, risking $25. So if you have a $100 account and you risk $25, you're risking 25%, which means you get 4 trades before you go broke. So I wouldn't do this on a real live account with $100. This is way too much. You need to shrink down to the minis, which that's why I'm not trying to tell you to trade Bitcoin right now, because you kind of need more than $100 using at least this trading platform. Yes, there are actual crypto trading platforms where you can use $100 and still only risk $1. Again, that requires you taking your USD and turning that into USDT, and we're not doing that right now. So sticking with this platform, using that $2,000 demo account, this is how you do a trade that's equivalent to the $2,000. This is 1.35% of the $2,000, aka $25 leveraged up by 500. And to get out of your trade, you can do partials, which we're doing. We can't take a partial on a single 0.01 lot. See, like you can't do 0.05. See, you can't do 0.005. The lowest is 0.001. So if you want to close it, you got to close all. But we should have did our take profit before you hit the trade. But if you already hit the trade without no take profit, go to edit position, enable take profit, move it to where your actual take profit is. Let's just say, let me make this bigger. Let's just say we want to take out all these highs. So boom, $7 stop loss under the lowest low, and a little bit spare room. Boom. So you'll stop loss, you're risking $1 to make 7. That's a 1 to 7 risk to reward. You hit confirm and you let your trade play out. Reason why it's so big is come on the 1 hour. Here's what it look like on the 1 minute, which is where most people scout from. 1 to 5 minutes is where most people scout from. But again, our trade is in right here. We're up 48 cents, 50 cents. Our take profit is on the hourly highs, which is way up here, and then on the lows, which was down here. And that's it. If you want to close out the whole trade, you just close position. Boom. Now you're locked in. Let's go to close position. So you see right here, very likely, not now. Boom, that's $68 we made. The other 2 trades were all, from the previous examples where I got in and got out, over leveraged, perfect leverage. So this is where you want to be. This is too much. You're risking way too much. So now let's actually take you to the actual charting platform. Let's get into some strategy. What the hell? So let's go to our actual trading platform. Again, you can change your own colors, right click, go to settings, change the colors, change everything. This is just what I'm using for right now. So this is S&P 500, what mainly everybody who does futures, they trade either this and NASDAQ. We'll go over both of them, but for now, just stick with the S&P 500. A main asset that pretty much only goes up. So we're going to switch between this one and Bitcoin just to show you examples, because sometimes it might be hard to find an example in the S&P 500 since mainly it's meant to just go up over the long period. I'll be showing you how to mark up your charts, how to do everything, and the strategies that I use that help me be profitable, which I'll show you some of my stats after I get done explaining a lot of things. We'll go more in depth about where I'm at right now, the gains I've made, my average win to loss, everything that comes with at least showing you that I know what I'm talking about. Now, let's get into when do you want to trade? When is the optimal time for you to take your trades? Sometimes it can be in the middle of the night. Most of the time it's going to be early in the morning, right when the market opens. Us in America, we go off, Eastern Standard Time, which is the New York Stock Exchange. That opens up, 9 a.m.-ish, 8 a.m. pre-market times. You know what? Actually, we can do this. All right, here we go. And we're on West Coast time. Let's do Eastern Standard Time. Technically, you should do 24-hour time since the trading charts right here go by 24-hour time. And let me make sure I change mine. So I did change it to Eastern Standard Time. Yeah, New York. All right, so let's go off this. So this is called Baby Pips. One of the most famous sites you can come to with a bunch of free information. Right here is volume. It's a Saturday. Obviously, it's going to be low volume, but in general, even if it's not the weekend, You see them, they don't have any weekends on here, but it says it's closed for the weekend. It has just the time, not the actual day. No matter what, any time outside of New York time, maybe Euro time, which is the only two you should even focus on. But if you go Asian markets, which is Tokyo and Sydney, technically we always lump these two together. Nobody usually says Australian time or Sydney's time, even though they have their own stock exchange. Most people just lump Sydney and Tokyo together and call it Asian time. Either way, they're still extremely low. Yes, you can get into a swing trade overnight, wake up early in the morning and see where you're at, but why would you when you know it's barely even going to range? And even within crypto, it's not really going to move at all. The times with the most volatility outside of New York is what I said, Euro, or aka London. That opens up at 3 a.m. Eastern Standard Time. So convert that to wherever you're at in the United States. If you're not on the East Coast, if you're on the West Coast like I am, it's about 3 hour difference without daylight savings time, 2 hours difference with daylight savings time. But that's why I said just put on 24 hour, because you can see 3 a.m. all the way up to 12 is, 1, 2, 3 to 12. So 3 on 17, or 3 under 12 is just, 1. Once you get past 12, it goes 13, 14, 15, 17, which is 1, 2, 3, 4, 5. So Eastern Standard Time closes at 5 p.m., aka 17, opens up at 8, which is 8 a.m. And then Euro closes at 12, which is noon for Eastern Standard Time. Those are volatility markets. Every day during the week when the Euro closes, you see a spike because Euro's taking their last profits or their last sales. So to come over here, same thing. You can kind of cheat. Go to session breaks. This is only a New York Stock Exchange time. Let me go to ES because crypto's open 24/7. So if you go to hour, these are the last 24 candles since we're on the hour time frame. We opened up right here. So the high of this 24 hours, we learned this just right now, is up here. The low of this 24 hours is this lowest one right here. So this would be what it moved on this day, which is a Thursday. Oops. So from right here to right here is the highest high and the lowest low. What do we call this? A downtrend. Well, a downtrend. So Thursday we moved down. Had a spike right here. Without context, you don't know why I did that. Technical analysis, sure. Fundamental analysis, probably some news. Maybe Donald Trump talking, just like right here. We all know this is Jerome Powell and Donald Trump that caused this V-shaped recovery. That was on Friday. So again, these are session times. So if you wanted to find Euro close, what time did Euro close? Close at noon, aka 12. So you go to 12, all right, which is right here, Euro close. If we go down to a smaller time frame, that was Friday. We're doing Thursday. On this 5 minute, we just shot right down. Next candlestick, shot a little bit up, 50%. 50% retracement. That's a nice little trade if you scalp it. But regardless, that's Euro close. What time was Euro open? At 3. So you can come here. On my vertical line, boom, that's Euro open. And then here's another trick you can do. What's the highest high of Euro? Looks like it was right there. The lowest low of Euro, there ain't no stick. So that's the close. Yeah. And then let's see about New York. Did New York take out the highs of? Nope, it did not. As you see, normally it retraces. Not normally, but there will be a retracement from the highest highs and lowest lows. Yeah, New York never recovered. It got halfway, like right here. Not even halfway, majority of the way. So this is the highest high of New York, which we already kind of did it. This purple one did not take out the highest highs of Euro. Did it take out the lows? Yes, it did, by a lot. Down here, this is the lowest low, so you can take trades based off that. Now, we'll talk about that a little bit later, but maybe we'll, maybe we won't actually. But regardless, that is a strategy that people do. But anyways, that's just the sessions. Come here, baby pip sessions. Like I did, type it in Google, baby pip session times. Put it to your time frame. I suggest going off Eastern time zones. You can see it's the most volatile. You want to get in and get out. Yes, you can hold it throughout all time frames of the day, but if you're doing conventional times, you cannot take a sell or a buy outside of New York hours. If you're doing futures, you can trade 23 hours throughout the day. It only closes for 1 hour from 17 to 18. It closes and opens back up. So 23 hours a day, 6 days a week technically, because it opens up Sunday. Sunday Asian times is when it starts opening up on Sunday all the way till Friday, 8, maybe 17. Yeah, 17 is when it closes. Regardless, 23 hours a day. That's futures, that's CFDs, which is what Hero FX is, the CFD. So you can trade 23 hours, 6 days a week, pretty much. Yeah. So anyways, or we can talk about any kind of strategy or even why we want to buy down here and sell up here. We got to understand what even is this? What are we looking at? What are these prices over here? What is this up here? What does all of this everywhere mean? What is this down here? All of it. The most important thing are these candlesticks, or aka Japanese candlesticks. There's plenty of other different ways you can look at this. We're not going to do anything else but use the candlesticks for now, because that's how everybody learns. That's the easiest way to learn. And why not do what everybody else is doing, so that way you know how to go with the market and not against it. Got it? Got it? Good. Okay. Let me go ahead and delete that. Here's a nice little chart that I found. So same thing. How to interpret candlesticks. So green, the default colors are green and red. Green means go, red means stop. Green means good, red means bad. Green means up, red means down. So you have a wick up here, upper wick, and you have a lower wick. That means at one point in time, the price opened up from right here, got shot up, got shot down, got shot up, and then closed, which will be right here. So the reason why these aren't filled is because it got pushed down before this complete candlestick closed. We can do this on the 1 second all the way up to the 3 month, 100 month, monthly, 4 hour, 1 hour, doesn't matter. Whatever time frame you're on is whatever the candlestick closes on. So if you're on a 1 minute, it closes every 1 minute. If you have 3 candlesticks on a 1 minute, that's 3 minutes worth of candlesticks. So again, you opened up right here because whatever candle was right here, it closed down here, which would probably be red, or it closed up here, which would mean it would be green. I'll show you examples. But on the flip side, here's the opposite of when it's going down. Let's say it closed up here, which it showed you right here. So the next candle means it opened right here and it got shot down, or it went up and then got shot down. Either way, it closed down here. So the best way to understand if it's an open or a close is by the color that you have it set to. If you use default, the next candle closes green, so this would be the next candle from whatever was over here. This one closed green, so it's up here. You don't say it closed down here because it's green. If it was red, then it closed down here. Does that make sense? I don't know to you. Let's go find out. So let's go back to here. Now, based off my colors, purple is down. Whatever this color is, they call it cyan. To me, it's like blue. Is up. Let's go on to 1 minute. Again, it doesn't matter. So we're using, it already closed. So this is the ES, it's closed on the weekends. So what is this one? It's an up candle. Where did it close? Since it's an up candle, it closed at the body. So right here, boom, closed. The previous candle is a down candle because it's purple, or yours would be red. Where did it close? class, closed at the body. Boom. That's it. The next candle, obviously this was a quick ass move. It opened up, got shot up right away. And you see this big wick? That means it got shot down right away because this was the closing candle, which is always gonna be volatile. But it ended up closing right here because the market closed. This was a Friday. It's gonna be a bunch of volatility. But if we go to Bitcoin, the market is currently open right now. You see how it's moving? So here's a good example using these three. Let's try to zoom in a little bit more. The previous candle, or the previous two candles. So this one got shot down. The next one, it opened right here. It's on 1 minute. Got shot down, shot up, shot back down, closed right here. The next one opened right next to it. And this one immediately went down. That's why that big ass wick is there. Got shot right back up and closed. And you saw this one just complete. We opened up on this one, rewinded 3 seconds, and it was going down. Got shot down, got picked right back up, closed right here. And the next candle, which is currently forming, but you can see it immediately got shot up. So same thing right here. Candle close, candle open. A wick means it didn't complete because it immediately got rejected or got bought up. In this case, it got sold up. A bunch of buys, and a bunch of sales all the way back down to close right here. Bunch of buys, nothing but buys, barely any wicks. Next candle, still buys, now nothing but close. Same, you get it. Hold on, let me do this. And again, it don't matter on what time frame you're on. Same thing with this one. Candle close, candle close, candle open, candle close, candle open, candle close, candle open, candle close, candle open, candle close, and currently candle open. We don't know where it's gonna close yet because it still got 2 minutes to go. Wicks mean it was going down here at one point and got bought up. Where's the big wick? It was going up. It was going up at one point and got sold back down. Going up at one point, got sold back down. Going up at one point, got sold back down. And that's, what the hell? Sorry about that. And basically, that's the quickest example I can give you of how these Japanese candles work. Some people love wicks. Some people hate them. Some people love the bodies. Man, I cannot. This shit is fucking up. Some people love the bodies, and some people like me take both in consideration. You'll find out what works for you and what you gonna consider. Now, let's get into, oh crap. All right, so let's do the daily now. Each one of these candlesticks again represent one day. So this was Friday. Oh, let's go to Bitcoin since it's currently open. So this is today's candle. Obviously, we still got, it's about to end. Seconds, minutes, hour. Ends in 1 hour. What time is it? No, it does end in 1 hour. Didn't realize it was already 4 o'clock. So yeah, it ends in 1 hour. Let's do the previous day. At some point, so let me do this one. So it opened up where? If it's a down candle, it opened up right here. No, maybe I should do this one. Yeah, let's do that. So since it's down candle, it opened up right here. All throughout this one day, at some point, this was the high. Put on magnet. This was the high. This was the low. When it closed right here. That's why you see today it opened up right adjacent to it and it's still trending down. So let me go ahead and try to make this a little bit easier and color code it. So remember, green usually means good. Red usually means bad. And let's just go for the close. Blue. There you go. And then this is the body of it. So some people call these snail trails because you see it's like kind of trailing, where there's trailing ahead, trailing below. And then the whole body, which is where it's filled at, which means they're closing. The hell? Sorry about that. The body of the candle, where it closed at, the highest high and the lowest low for this one day. Now, if we go to 4 hours, which, you know, to get to 24 hours is the past 6 candles, 4 times 6. So each one of these candles represent 4 hours, and the past 6 of them was that whole day. So throughout that whole day, this was the highest high. As you can see, we kind of almost retraced there. This was the lowest low, and as you can see, we kind of almost retraced there. And at the end of the day, it closed, which was this candle right here. The 6th candle closed right here. So we can even zoom in further. Go down to every 1 hour. So 1 times 24, 24 hours. The opening candle of this 24 hours, the highest high, the lowest low, and what we did all throughout the day until we got to that 24th candle, wherever that is. Same thing. Now, 3 times make you great, so let's do the 3rd time, the recap of opening and closing of these candlesticks. So again, this is on the 4 hour. We're on Bitcoin because it's currently open. It's a Saturday, so these past 4 hour candles aren't big moves, considering it's Bitcoin. And you can see right here, this next candlestick close is going to close in the next 57 minutes. So it's been open for about 3 hours already. It's a countdown. So every new candle, this will say 4 hours, and it counts down to 0 before the next candlestick is going to close. So the previous 4 hours, this was the highest high. This was the lowest low, and this is where it closed at. And as you can see in real time, this next one is forming. So you can see already where it opened at. Class, where did it open up at? Hopefully you got it right. Since it was a blue candle, it opened up down here. What was the lowest low so far? Down here. What's been the highest high so far? Up here at this top wick. And since we haven't closed yet, and I'm not about to wait 1 hour to watch this close, we don't know exactly where it's going to close, but that's just how you look at current candles. If you want to go to the 1 minute, we can see where it's going to close in the next 25 seconds. And this is how kind of binary options go. Every few seconds, you try to guess where it's going to close and where it's going to open and at what price. That's more like gambling to me. But let's just wait this next 10 seconds. And we close. So we close right there, which now you can see in real time, it usually opens up directly next to it, and boom, big shoot down. But you can still see it opened up really at that top wick, but this was the opening candle. And you just let it form. You see what it's like trading on a 1 minute. So that's the recap. That's what candlesticks are. Japanese candlesticks. There's a bunch of different options you can go through, like these Heikinashis, which is a whole different thing in general. But for starting, just stick with the regular candles, and that's that. So we kind of already hinted over here. You got to turn these on in your settings. Settings. And count down to bar close. You want to make sure this is clicked. I don't even know what the plus button is. But no overlapping labels. So if you had a bunch of indicators, none of them will overlap, and each price will have its own you know, you can see it. It's not overlapping, just like what it sounds like. So yeah, I always suggest having the bar countdown closed because now you can kind of understand exactly more in detail what's going on. These are the price ranges. As you zoom in, you can see you can get even more detailed in the price. Up here are the time frames. Down here is, you know, the current time, which they're all in 24-hour. And then I'm on UTC Phoenix. I'm in Phoenix, Arizona, so you can change that to wherever you are in the country or in the world, really. And then we're not going to get into this down here, but you can still do paper trading on here. I can still open up a trade right now if I wanted to, you know, get into a sale, make sure it's a market order. Boom. Same thing. And then to close it right here. You can put a take profit, see if we can hit these new lows, stop loss. What the heck? Why is it not working? What are we doing? Do we gotta modify it first? Okay, one at a time. Stop loss. That previous high, boom. So now we're risking $87 to make $135. And you can do the same thing on there. I think this one might get stopped out. This is why you don't just do random stuff, but it's $87 on, again, your $2,000 account, which is what I always suggest, and we'll get to that later why. And boom, stopped out, lost the trade. Who cares? Let me close this. Yeah, so that's the recap about exactly what candlesticks are, the time frames, the price range. Yeah. You get it. You get what I'm trying to say. Now, oh, excuse me. 1 second. Now let's see if we can talk about highs and lows and trending up and trending down. Easy enough, but let's see. Starting from a bottom, we got to move up, a move down, a move up, a move down, a move up, and a move down. And on the opposite, we got to move down, a move up, a move down, a move up, and a move down. What's a trending up and which one's trending down? You said on the left it's trending down, you're wrong. It's trending up. If you said it's trending up, you are correct. So that means this one is trending down. Now, what is considered a high? A high is when we have our move up, followed by a move down. That is a high, this is a low. Same thing. This is a high, this is a low. It is only considered when there's an immediate move down. Now you can call that a high. If you got 3 candles going high, it's the 3rd candle before it goes down. The middle candle and the first candle, they're just upward movement, but it's not considered a high until it makes a low. So for the final one, here is the high. And let's just go ahead and assume it closed right there, and that's a low. Same thing now for the opposite. We start at this high, and let's go ahead and just change the color to make things easier. And then we move down to this low, high, low, high, and low. Out of all these, what is considered a higher high? Let's get a new fancy color. Here's a low, so let's go ahead and just start marking that one. When we move high, what this blue one is, and we move low, so that's a high and that's a low. This will be considered a higher high for obvious reasons. It's higher than the previous high. This will be considered a lower high for Obvious reason is because it's higher than this previous low. Higher high, lower high. Higher high, lower high. Now, again, let's do it for the downtrend. So again, we're at this high. So this is the original high. We make this move down. That's a low. That's your first low. So what would this one be called? This would be what? Your higher high? No. It's a higher low. Or a lower high, whatever you want to call it. So here's another low. This is considered a lower low. Why? Because it's lower than the previous low. This would be considered a higher low. Why? Because it's lower than the highest high. So a lower high, if you want to be technically correct, a new lower high. It's lower than the previous high. A lower low. Lower than the previous low. Get it? Got it? Cool. Now, let's go find some examples. Dang. Bitcoin up, making a little move. So let's start, somewhere right here. Let's just go over here. So we're coming down off of which high? So we have a move down and a move up. This is a low. We have a move up and then a move down. This is the high. So low, high. And we have from a move down, a move up. Get the point? This is a low. So we have a move up and then another move up. Which one's the high? It's the one from the move down. This is another high. Is it a higher high or a higher low? Depends on where you're coming from. If we starting from right here, this is a low. This is a high. That means this is a new lower high or higher low, lower low, higher high. It's a higher low. It's higher than the previous low. And then it moved up and it moved up again and moved down. So if we starting from back here to right here, this would be what? Technically, it's a lower high. It's it's lower than the previous high. Another low, a new higher low. So you can see we're kind of consolidated. Because look, high, lower high, lower high, low, higher low, higher low. Get the point? So if you want to find a trend up, you don't want it to break. So did this break? We started from right here and moved up and moved down. And moved up and moved down. And moved up and moved down. You see what's going on here? So this is still a down move. Boom. 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 Now that's being technical, but technically you see what's going on. If we would have started from back here, then it'll make things a lot cleaner. But either way, you can kind of see it's still moving up. So technically you consider this an up move just because we're going by this local zone, trending up. Now, here's a good downtrend. So start from this high, move down. Another high, another move down. Another high, big move down, big move up, big move down, big move up, big move down, and we break. So the downtrend kind of starts from right here, and a little uptrend. Where's my arrow? Starts from right there. So we're on the 5 minute. Obviously, it's a 5 minute trend. If you want the real trend, you got to zoom out. So if we go on the daily, you can kind of see we was trending up, consolidation, and now it may be starting to trend down because we're not making any new higher highs. No new higher highs means, now we're kind of trending down, as you can see. Easy enough, right? Excuse me, the hiccups. Missed. So we got a low right there. This is just the previous uptrend. Low right there, and a low right there. And then our last low pretty much was right there. And now we're back here in this zone again. Uptrend, downtrend. And you can just find all different spots where that happens. But these are all on daily, so these are big moves. Technically, you don't need to go past the hourly, especially if you're not going to be in it for too long. You can really see the trends right now. Like, look at this one. Big downtrend that started February 25th, kind of ended so far February 28th, 3 days. So what have we gone over so far? Pretty much just how to get started. Found a platform, got a chart, found our platform. We found a platform to chart on. So again, the Brokerage, Hero FX for now. I know I got plenty that I do use. I'll go through all of them. I'll leave some in the descriptions, future videos, my past videos, regardless. Showed you which ones you're gonna be using. Now let's go over a little bit of the strategy. So the first one we need to do is identify a trend. So you can kind of see right here what the trend is on this, but just to get this all out the way, go to my handy dandy marker. Do. What do you think it's doing? Exactly. Going up, higher high, higher high, higher low, higher high. That's the trend up. So on a downtrend, same thing. Low, lower high, lower low, lower high, lower low. Higher low, lower low, lower high, lower low. That is a downtrend. This one is a uptrend. Super simple. That's how we like it. So higher highs, lower lows. Uptrend, downtrend. Let's make this bigger. There we go. Let's redo that. So uptrend, which is higher highs and lower highs. Higher lows. Right here. Downtrend, which is lower lows and lower highs. Pretty simple. Let's go find some. So my favorite time frame is 4 hour. Luckily, luckily, depending on what side of the chart you own, we have been having a significant downtrend in the S&P 500, which you can see right here. Or you can see over the past week, the past 3 weeks, we've been going down. So just to go on a tinier time frame and point them out, let me use this. So downtrend, boom, low, a higher low, lower low. That's it. That's how you know you're going in a downtrend. Yeah, so even this one right here. So you got your high right here. Boom, go down. You made a new low. Break a structure. You come up. Now from here to here, this is a high. This is a new lower high. Broke that. A lower low. From here to here. You go back up, a lower high. You go back down, and it's consolidated, but you get the point. Boom, downtrend. High, higher low, or lower high, a lower high, a lower high, or how you really should say it is a lower low, a lower low, a higher low, then back to a lower low, and we break. So let's find another one. Uptrend. Here's the low. Here's the recent high. So you come down, boom, make lower lows, you don't break, come back up, you make a new high. Go back down, you make a higher low. You go back up, you make a higher high. You come down, you make a lower high. You go back up, you make a higher high. You get the point all the way until you break, which right here we consider a break. Either way, this part was the uptrend. This is technically considered consolidation. Then we get into our downtrend. So consolidation. Now we headed to our downtrend, which is all of this. Uptrend, consolidate between these levels, downtrend. You get the point. So here's what you probably should go and do next. Go into your trading view, find a few candles. Let's do, 6. Find 3 going up. So 3 highs and then 3 lows. So just to recap, a high takes 2 candles, a move up and a move down. So this would be considered high. Now, well, with this one, is this a low? Remember, it takes 2 candles, a move up and a move down and a move down and a move up. So no, this candle, a move down and we have a move up. Ding, ding, ding. So we take the lowest low. Boom. So here's your high and here's your low. Go find 3 highs and 3 lows, so 6 together. Once you get good at that, go ahead and do it. So you can pause the video right now, go do that real quick. Check over your notes from everything else we talked about. What is a candlestick, the bodies, the wicks, make sure you understand that. Then go find some highs, go find the low, and then identify a trend. Find a trend up, and then find a trend down. So here's a good trend down. Boom, 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 boom. Consolidation. There's not really no trend here. And here's a little up trend. Little one. Up, consolidate, up, down, up. So just like that. Oops. Find you something like that. And then something like this. There you go. There's a pattern within here. We're not getting there yet, but that's all I need you to do. Go find your uptrend, go find your downtrend, go find 3 highs, go find 3 lows. Okay, now I kind of already hinted on it, but let's do this again. So we already know highs and lows, and we know trending up, trending down. The third piece is consolidation. So let's do an example. All right, let's just do that. So if we have our move up, high. We have our move up, high. We have our move down, low. And let's just skip. We have our move high, and then we have our move down. What is consolidation? Where do you see it not really making a move? So technically is when you're in a range. All of this right here, no matter how many candles it is, depending on the time frame, you can definitely make money doing these little trades up and down right here. But this is technically considered consolidation because we're not making no drastic move up or down. So we came out of probably potential consolidations from back here with this move up. Then we stayed in this area until we finally made our move down. Trending down would be right here. Trending up would be right here. Consolidation right here. Let's find an example. Trust me, I'm getting somewhere. There's a reason why we're taking it step by step. And I already have one. So where would consolidation considered being? I don't know. Well, to me, right here, and we're on the 30-minute too, so oops, and right there. Stayed in this range for quite a while, broke out of it, made a new low, so boom, nice trending down, reversed, and we'll talk about what I see right here as far as reversals and breakup structures, but reversed back up and went right back into this zone until we kind of broke out of it again. Now you see what I'm talking about. So consolidation is moving sideways. So we have three ways the market moves. It moves down, it moves up, and it moves sideways. So same thing, a little bit different. If you zoom in as much as you can, as much as you're willing to, you still see consolidations even on the smaller time frames. And then you see the breakouts, breakdowns, breakups, same thing. Consolidation is just moving sideways. The boring time, the undecision time, the good time for you to start understanding what may happen, what could happen, and what you think is going to happen, and take your trade based off that. So we know trend up. We know consolidation, like I said, we know trend down. Now we need to figure out when is it gonna trend up and when is it gonna trend down, aka find a reversal. So let me draw an example first. Same thing. So say we've been trending up, boom, and then now let's do something like that. So we know about consolidation, so technically we can consider this right there consolidation, and even that. Yeah, I could have drew it. You know what? Let me make it more clear. All right, good enough. So we know about consolidation. Now, what you want to look for is when the trend breaks, even when the consolidation breaks. So you can kind of see it already just because, I'm a great artist. But trending up, so we got to get to our lower highs and higher lows. We have a high right there. And we have our highest high right there. and we have our lowest low. Well, still, I guess we'll just go with that one. Now, a break is when it breaks out and stops making the higher high. So as you can see, this was a high, this was a high, and now we're starting to get lower and lower consolidation, and then boom, it breaks that lowest low that it had made before from the previous trend. So there's a lot of terms from this, you know, whatever, head and shoulders, triple bottom, double bottom. You probably already heard of those if you've already been looking at videos, but I don't like to confuse things. Just stick with highs and stick with lows, and stick with when it breaks the previous lowest low of the previous trend. So this was the previous trend up, boom. Right here is where we start to consolidate. From this circle to this circle to this circle. Let's just consider this area consolidation. That means this is the lowest low that if you want the trend to continue, you do not want it to break that. As you can see, we broke it, we closed once, we retested it, and then we got shot, aka rejected right down. That is a break of structure. Now to continue the break, we don't want it to we don't want it to come past this area again. It just needs to keep getting rejected, just like that. That would be a break of structure in the simplest terms to explain it. Now, what do we do after we draw the example? We go look for one. Can we do this on any time frame? Yes. I want you to start again with where can you see it the easiest. If it's not easily seen, then don't do it on that time frame. Now, once you understand what you're looking for, you can do it on any time frame. These are major moves, big moves. A lot of money can be made. Same thing with the hourly. Same thing with the 30-minute. Same with the 15-minute. But let's just pick one. There you go. Now, let's start from the consolidation. We got consolidation where? There we go. From right here to right here. And then we got our up move. Now, what you want this to happen is you want to continue up, you know, being dramatic. But whatever happened right here, which I think this was March 2nd. I don't know. This might have, no, it was a Sunday. Oh, this is a Sunday. Yeah, this might have been that announcement about the reserve for Bitcoin. So this stuff could happen. I like to ignore this because it's going to mess up what you're trying to learn. So let me backtrack. Now, again, coming back to right there, let's call that our structure point where, I don't know where you want to start from. Let's just start from right here. Even though this is good right here, this whole move, let's just start from this move up. So essentially, it's like if I was doing my drawing, we're starting from up here and we're trying to make our moves. So we're moving, boom, we broke. Man, what is they barking about? In this little zone, stayed in this zone. We broke up. Now, where would be the next break? If we want this to continue up, where is the break? So remember, we made our high and we made our first low. Our first low after that is right here. So it broke right here. I consider a real break is when it breaks from where, if it breaks the lowest low from where it broke out, which would be right here. So if you want this trend to continue, you don't want it to go below this. It's probably a 50% retracement. Yeah, just about. I got this magnet on, that's why it's messing up. But ignore that. So keep going, we keep going. And now we retest the low from where it started. Remember, I say this for me is a break of structure. This right here is a break of structure for almost everybody. And then this is just deciding if you're gonna take it short or not. And then mainly people will wait for a retest to take a short down from here. So my breaker structure right here. And that's because I usually go on higher time frames and we're on 15-minute, which is probably the highest most people would use for a scalp. And that's pretty much it. So we broke down. So where would the next breaker structure be? When we break this going up, which is right here. And then what you want to do is wait for a retest. It didn't come all the way down, so maybe you got in because you're aggressive, maybe you didn't. Most people wait for a retest somewhere around here. Let me turn this off. Before they got in a buy. And probably would put the take profit right there and a stop loss right there. Quick rundown. Now we'll give you some homework, or let's do some more examples on a different time frame. Sorry, my dogs was acting up, but here we go. So we're on a 1 minute time frame. It's the same thing. So identify our trend. We got our high, we got our lower high, and then we got our super low. Let's do that low too. And then let's just take that one. So you can see we're trending up. Boom, boom, boom. Ultimate high. And then we get our first low after this big candle. Remember, high, low. So this is our first low. And then the highs start getting even lower. And then lower and lower. And then boom, we break right there. So this is on the micro time frame. We were trending up. Hit our first low after that trend up. Kept going. Going up. So ultimate high, low, and this is the first high where we didn't make a new higher high. So now you can start looking to see what's gonna happen with this trend. If we want the trend to continue, remember for me, we need to stay above here. This is on the micro time frame, so 1 minute super zoomed in. We still good when we're right there. Because obviously, look, we didn't retest it, so your stop loss should be somewhere down here anyway. We still go, boom, made a new high. So we broke this high, so we're still in the uptrend. But look what happens. Immediately we get shot down, and now we make a new low, getting closer to retesting this. Remember, we don't want it to go under. But what happened? So we had a high, and then our first low. Now this don't count as a low, because remember, it takes two candles, one up, one down, one down, one up. So you go off this candle. This is a move down from a move up. Boom, we have our new low. That broke it. This is a break of structure. It didn't close yet, so I personally don't count it. We're on the 1 minute, so if the 1 minute didn't even close, forget all the other time frames. So technically, this is just a liquidity grab, which we'll talk about that next. Actually, that is our next thing to talk about. So right here, just grabbing more money to move up. What you don't want to happen is this candle right here. So this retested, open up new candle, shot up, immediately rejected, and we close. This is your first confirmation, confirmation right here, this candle, of your break of this structure right here. It's a tiny structure. The bigger, the better. Yeah, the bigger, the better in this case. So this is on the small time frame, so if you're scalping, then this is as big as you want to get anyway. So yes, it's a break of structure, and that's when you can start seeing if the trend is going to change or not, which obviously it is, because we never even got back to this high, let alone this high. So that is your downtrend after this break of structure right here. Let's delete that. And then we can keep going. So what did we just say? We just said this was a downtrend right here. This is why people use trend lines too, but consolidation right here. Technically, I will say even right here. This is all consolidation. Now you gotta wait for it to see if we start a new trend, which we do. So where's our ultimate low? Technically it's back here. but we don't have, remember, move down, move up for it to be considered a lower high. So the first high that we get after these lows, which one's higher between the two? Shit, I can't even tell. I think it's this purple one. Boom. Do we make a new high from the previous low? So high, low, high, low, high. So we broke the structure again, immediately almost. Came down, and then here's where we just left off. Now we're coming back up, new low, or a higher low, because this is the low. Let's delete some of this. So we have our low right here. The next low right here. The next low right here. The next low right here. Now when it break that downtrend, so here was the downtrend. The downtrend's right here. When did we break it? Boom. We did not make a lower low. We did not make a lower low. This is our first new high. This is our next new high. This is our next new high. And then it's our higher low. And then higher highs. Higher low. Higher highs. Higher low. So right here, I'll consider the break. So basically a break of structure is when the trend changes and it's that next higher low. So this is the lowest low. The next highest low is right here and right here. However many new lower highs you want to look for, that's on you. The bigger the time frame, the better. So if we're in a low time frame, you might just want to look for the next one and then consider if it retests again to get in. Same thing right here. This is a low, a new lower low. Wait for a retest and get in for the short. Oops. All right, so just to recap. Handy dandy notebook. Break of structure. Or a BOS. When the trend that's current is broken. Can you see? Get it? Write that in your notes. Now, since we went over quite a bit, I don't know if you guys did your homework for finding consolidation, but let's start there. You should already did the highs. You should already found out the lows. Now go find some consolidation, and I want you to find where you would consider a break of structure to where it goes and makes a new trend from the previous trend. Get it? Got it? Cool. Keep doing it. Dang, my bad. I thought I was recording, but whatever happened, it paused. What I was doing was a recap of where we at, so I already wrote it down, so we're just gonna leave it here. What we learned so far was what are candlesticks, time frame and sessions to trade, up and down trends, and then sideways movements, and then finally a break of structure. At this point, you're starting to get a good idea of, what's going on. That's pretty much like the first thing you want to learn about anything. Honestly, like you're already on your way to, making that bag. That get rich quick. Just playing, don't do that. It's not, just take your time. You're not going to get rich quick. But so far, like you already know more than 99% of people who's never even seen a chart. Well, 100% more than them. And a lot more than even experienced people as far as, people who are currently trading, but they think they know too much and they forget about the basics. They forget about this. They just look at it and don't understand what they're looking at, and they kind of ignore it because what happens is you try to find that next shiny thing to where, oh, this is gonna help my trade, this is gonna help me get better. What's that next shiny penny? Just stick with the basics. If you want to use indicators, fine, but don't use indicators until you understand what price movement is, what up trends are, what down trends are. Just understand price action. Price action simply means what is the price doing at its current time. And you only know that by identifying uptrends, downtrends, and breaks of structure. Now, when you get technical, you start giving these things names, which the next thing, I guess, I'll go ahead and write it, is something called liquidity. I think that's how you spell it. Liquidity. So what is liquidity? So liquidity, should I type it? Let's type it. Orders that are at lows. Can't even spell right now. Lows and highs. Boom. Let's go to the hourly. All right, we're gonna go for some big ones. Man, there we go. So you see a nice rejection right there, and you see a nice rejection right here. This is on the hourly, so let me see how big this move is. Ooh, that's a 14% move. That's crazy. We don't need all that. Let's do this right here. So let's go off these lows and these highs. Liquidity are orders that are right where price recently just left. Technically, all these considered the same thing, but let's just go with big ones so it's easy to understand before we start trying to get technical. So this is liquidity, and this is liquidity. There's other names for this, but right now we're just keeping it this way. Trust me, we'll get to these other names and what these can be called, but we're just going to start with the basics, because if you don't understand liquidity, you won't know where you're marking and why you're marking. So let me give you a visual example of why this is liquidity. We're making our moves up, big rejection, we come down, we fill a bunch of orders to go up. Now, what did we just learn about stop losses? You know, usually when you're placing a trade, you put your stop loss under where your idea gets invalidated, which would probably be somewhere under this. That's where the liquidity comes from. We call it stop losses. Some people call it liquidity. I'm not gonna get into the other names because you haven't learned them yet, but if you have a stop loss right here, the market, let's think of it as a big snake and it's hungry. All it knows is that there's money sitting here. It doesn't know why, but there's money here. For people who haven't got in because they have market orders and missed their market orders, so the money's still there. If you have gotten in and you put your stop loss, it's still order right there. It's still a limit order. If I said market earlier, I meant limit. So you have limit orders because of stop losses and limit orders just because people want to buy and they limit didn't get hit. Either way, this is all money just sitting right there, aka liquidity. Market, think of it as like water. It wants to go to the path of least resistance. So it just came down here and picked up some. So immediately a bunch of new stop losses got placed there, and the people who had orders like right here, it didn't get hit. So there's still money on top of this money, on top of this money, on top of this money. All those stop losses. Maybe your $10 stop loss is a part of it. The same thing as a $50 million stop loss for whatever, high frequency trader that's going on. Either way, that's liquidity. Boom, gets rejected again. So what we just learned about where your take profit is going to be at highs. So your take profit just got hit. Others are just opening up new shorts because whatever they're looking at, maybe this is their zone that they want to get in for it to get rejected to go back down. And they just want to get in right here and don't want to wait for the full move from whatever they're looking for. Either way, new order just came through. So stop losses, stop losses, stop losses from all these shorts. Boom, pulled that liquidity and got moved down. Got some more buys, same thing, new stop losses. You get what I'm going here? Keeps moving up. I told you, like, you can have liquidity under a bunch, but the bigger the move, the more liquidity. So this is a big move. Boom, new stop losses. Same thing. And people who sold from their shorts because they got they got stopped out, meaning they had to buy higher than where they bought before. So that's just still more buys, which usually shoots it up. But that's why it also got shot back down, because more people shorted at this high where you should have short from. So kind of got a little tongue twisted and a little talkative there, but we're going to do multiple breakdowns, multiple examples, so don't worry. But that's just a, quick view of what liquidity is and some places where you can find it. Even right here. So let's let's look for some more. Let's go on my favorite time frame. Let's find some new ones. So pretend you got 500,000. No, that's not enough. Pretend you got $25 million. You need $25 million worth of sell orders for you to buy. So let's speculate why this was such a big move. And let's speculate why this was such a big move. You can see we got ups, downs, up, down, up, down, up, down, up, down, up. Back to here. So liquidity. People saw this as a break of structure to the downside. People got in shorts. Stop losses all throughout here. Boom. They do the trade, they take profit, so it shoots up. Because why? They sold from here and they had to cover from what they sold, so they bought back at a lower price to close their trade. And other people's, they see this as, oh, maybe this is the start of a reversal. I don't know why. Maybe they think just because, I don't know, it didn't close higher than the previous high, so I don't know. Some people just think that way. Either way, buy orders. What's happening is the person who has $25 million, he has a crap ton of money sitting lower and lower and lower. I don't know what that is. The market is heading towards that big money. Remember what I said, the snake. So there's a little bit of money up here. Usually it'll wake up, grab that real quick, which technically you consider that happening. Remember, on a 4 hour, so these are big candles. And now we're heading down and it's just filling. Anytime the market's moving down, think of it as it's eating and getting more full, it's buying. When the market is moving down, think of it as it's buying. We always think of it as selling off, but think of it as it's buying. Why? Because it wants to buy low to sell higher. So it's collecting up all these orders as it moves down. And it's getting down to that big hunk of change. So the boom, the first part of that $25 million, that's why it shot up real quick, getting taken out. Some more part of that $25 million getting taken out. Some more part of that $25 million getting taken out. Finally, it's all taken out. And now it's full. It got everything it can. It has enough charge to head back up to get everybody else's money that's up here. And this is all the market does, just keeps going. Now, as it's going off, think of it as it's selling at every key point. Boom, the market sells a little bit right there, recovers. Boom, the market sells a little bit right there. Boom. Now this guy He sold all of it. I'm making this up, of course. Pretending these are dollar signs. He sold all of it right here. And what happens now? All these other new shorts come in, new stop losses come in, and shoots it back down. This same guy, he fills more of his order, and it just keeps going that way. So liquidity, the bigger, the more, the better. You can still do it on smaller time frames, but this is a 4 hour, so technically, let me see. Get out of here. That was a 20% move. A lot of money. A big sell-off, a lot of money. Imagine if it was leverage times 500. That's a lot. All right. Oh, excuse me. All right, one last time, just so you understand what these liquidity grabs are, where liquidity's at, aka liquidity sweep, liquidity grabs, wicked out, wicked in. When you hear these terms, you kind of gonna start understanding what people are talking about. So again, we're on the 4 hours. So usually, like I just said, wicks. So boom, the one we've been using already, that's a good grab. Boom, that's another good grab. Boom, that's a really good grab. Boom, that's another good grab. You see, because they're wicking and immediately going the next way, wicking and going the next way. Here's a big one. We're on the 4 hour, and another big one. Now, if we zoom down, look at big moves. Oops. So the circles I've just drawn, you can see the big moves. So on the 4 hour, they look like, little wicks. But on the 5 minute, you can see like they're drastic moves. So when you're trading on the 5 minute to 1 minute, you don't know what to look for yet to see where the reversal's at, but you already learned breaks. So boom, here's a break of structure right there. Technically, you can start getting in right here. There's a break of structure. You see where it's going up, it's going up. And here's the first new high to where it creates the first lower high. So here's the low, high, boom, official high and lower high. You might want to go ahead and get in and put your stop loss. Take profit right here and your stop loss under where you think it gets invalidated. So just to redo it again. So, oops. You'll get in right here. So red is where your stop loss is. Green is where your take profit is. The center line is where you got in on this retest. Simple. Nice risk to reward ratio, 1 to 3. Risk $100 to make $300. So again, liquidity sweeps, the wicks, or what happens when you got your stop loss where everybody else got their stop loss and where big players got their buys at key levels. That's why you get quote unquote wicked out or stop loss hunting. They ain't hunting your little $500, $10. You just happen to be in the same place that everybody is. So it's a cumulative, I can't even say that word. It's a big gathering of money and you happen to be part of it. So they take yours along with the ones that they really wanted, which was all of them added up, and then the big players' money too. So simple. Well, maybe it's simple, I don't know, but we'll go over it multiple times. We still got plenty more strategies to go over, so yeah, you get what I'm trying to say. Not sure exactly what happened, but I updated my computer and I don't know, things just went haywire, so I had to use a different computer that I'm on right now. So probably not gonna have no video for the next few lessons, maybe, or not a video, but the device I was using to record myself, my camera and my face. So either way, let's continue on to the next topic, which is key levels. And we only got about 2 more after this, and then I'll be able to put it all together for you, and then hopefully you got a better understanding, at least what I do, and then we can go over some of my trades that I've taken this past 2 days or whatever. But key levels, so let's just say we have a drastic move up, little move down, another move up, big change down. I'm just drawing whatever. All right. So key levels are, I would like to say, places to where it makes sense to where either you, other people, big companies where they're more inclined to buy. It could be a round number, like let's say 6,000 even right here. That can be considered a key level. All the stuff we talked about before, breaker structures. So any of that can be considered key level, supply, demand, support and resistance. So essentially, key level could be a high. So the most recent high, or the high of all the most recents. And then another one can be the low. So these can be considered key levels. Now, how you take the trade is up to you. You can take it at a breakout, or you could take it as like a bounce. So if it was to come down here and then bounce up again, and then just bounce up again. So essentially a key level is any place to where you, with your strategy, deem that it'd be a good place to buy, or to take a buy, or to take a sell. So more key levels could be like even right here, like the mid, not necessarily the midpoint, which that's a good way to think of it if you're doing like a 50% retracement or equilibrium. Or it can just be like where price tends to like hit off from. So let's show you an example. So again, we're on the 4-hour chart, and it's the same thing. So I like to mark my key levels just with a line. It can be like the line that goes all the way through, which I like to use lines that go all the way through so I can see like history and see where it may have hit previously. And then that gives me more justification if that's going to be a strong level or a weak level. And strong and weak is all based on your strategy. Anything I mark out on the 4-hour, I'm going to consider strong because I'm probably taking the trade on the 15 or the 5 minute. So if it's a good, support zone, which is what I would consider this, and I take it on the 15 minute or the 5 minute, then I'm pretty sure I can capture even a decent bounce and just get out and get in on that same time frame. So for example, let's say I took this trade, which I may have, we can go look at my trades. But as soon as you go down to the 5 minute, so if you're a scalper, people take this trade all day because let's see what kind of move this is. 0.23% move, and SPY don't move like 1% crazy every day. So 0.25%, and you're on high leverage, or if you're trading futures, that's more than enough to make a few $100s or a few $1,000 depending on how many contracts you're taking. So another example of key levels is fair value gaps. So here's one right here, and it never really exactly retraced it, so it still can have an opportunity to come down and even bounce out of here again, even though it tried. But you can see it did it for this fair value gap. And mind you want to go with the most recent fair value gap just for this reason. So if you did mark out all these, because there's 3 in a row on the 5 minute, then you want to start with this top one and ignore these two until this one gets either broken through or it gets covered, which I would consider this covered and just respected, not covered and disrespected. And what I mean by covered is if we at least wicked into it. We didn't close into it, so I won't consider it disrespected. And then it bounced off of it. And you can see like it just kept making new gaps. So if I was to look for another trade, maybe coming up on Monday, I personally don't care about 5 minute fair value gaps unless I'm already knowing the trend, which the trend is based off what I say it is because I'm the one who's taking the trade based off of it. And usually I do it from, not the daily, because if that's the case, the trend is still down. all these down days and we finally had a retracement. But it can be a trend off the 15-minute, like what the past, hour and 15 minutes were. And now you can see the trend is up. So trend is, to me, is based off the time frame that you're looking at and where you're going to take your trades. Because if you're marking on the 15 and then you're taking it on the 1 minute, the trend is going to, it's going to be biased to what you're looking at. So essentially that's key levels, short and sweet, nothing too crazy about it. But since I already have it up, what I like to do with key levels is also take it from a fair value gap point perspective. So my key levels have 3 parts. So you already saw part 1 was try to look for something that I can consider some kind of support, because I only look for longs. I do not as short, I just don't really care to. And usually when I do short, I just invert this chart anyway. Let me see if I can show you. So I'll just invert it and then I'll take my level. So let's say I like this level and I'm looking for it to either respect it or disrespect it, and we're already in it. So maybe I'll wait for a candle to close above come Monday, and then I'll look to get into quote unquote a buy, aka, which at this point it'll be a sell, because when you turn it back over, it's the same thing. So if it closed below, which was before above, since I had inverted, I'll be looking to get into a short to continue down, probably even to the next 2 levels, which would be right here and then this one technically, but you might as well just put it on the bottom. And that's how I take shorts if I really wanted to take a short, just real quick. But so part 1 was key levels. Now part 2 for me would be to see if that support range has some kind of fair value gap, and I'll take the closest one. So don't look like we had one. We had an inverse fair value gap. So this is when a fair value gap gets disrespected. It's called an inverse. And up until like right here, it kind of inversed it. I still consider it, it's an inverse. Let's keep it simple. But what day was that? That was on the 18th, and who knows what I did on the 18th. But here's the nearest fair value gap. So I would also consider this support, just because how many times price came up here and got rejected and then when buying flipped. Now you're gonna see it never came back and retested, which I don't necessarily like that, but you can still see that it has been respected just by these wicks right here. So I'll still consider this, a good little buy zone. So fair value gap, I think, well, I'll just do a quick explanation just in case, but it's when price retraces so fast it doesn't necessarily, let me take this off. So it doesn't fill. So let's say we was on an elevator and it got, the elevator capacity is 10 people and there's 15 people waiting. So all 10 people boarded up and the elevator took off. Now what happens is the elevator wants to return to come pick up some people, but there's still floors below that. So let's go back to like higher highs and higher lows. So if you remember that, this was the ultimate high before it continued low. So this would be another level. So there could be people on this level, which as you can kind of see, it respected it. So it picked up more people. So the elevator never returned down here to pick up anybody. So therefore, they're still down there and they're still waiting. And yes, they're late for work or maybe late to get home. And they probably already took the stairs by now, or they just got in on a different floor. Dumb example, but just trying to talk through this pretty quickly. So it's in the name, fair value gap. Everybody deems this a fair price because one, there's a gap, there's missing buy orders, not everybody got filled, and price left without them, which as a trader, that happens to you all the time. And then even if I continue this all the way across, you can see the reason why I think this is a good supply zone is because price was respecting it as a resistance until finally it broke. And then this will be the first candle truly where it closes above this resistance. And then this is the next candle that almost came back to test it all, but it didn't quite make it. So there's a gap there, and then it took off and never returned. Well, partially. So that's essentially fair value gaps explained kind of quickly. Maybe I'll slow it down again, but I'm just trying to get through what I all deem of this as a key level. So the last and final part is if it gets close to what I consider the golden zone, or at least the larger golden zone, which for me, I use the Fibonacci retracement. So I'll take the swing low and the swing high. So the recent swing low is right here, and the most recent swing high from that trade was right here. And there we go. We're at my first part of it, which was the 50% or equilibrium. So it did do a 50%, almost a 50% retracement. But these levels right here, as long as it comes to one of these lines, it makes me more confident to consider anything I've marked around here a good supply zone for me to take a buy to the next high. Or at this point, when I was looking at it, all this wasn't here. So I see this as a breakout from this resistance down here. So I'm pretty sure when I go back and look at my trades, I definitely took a trade around here. And probably either I took the trade down here, or I took a trade around here, and just got out at this high right here. Somewhere in this level. But again, all I do is I look to the left, see where there's some good points where price was being respectful to it. And then hopefully, you know, at some point it'll retrace to get back up here, which you can see it got a big rejection from there. It's still like floated around this level. So it's a good respecting zone for you to take, you know, you'll take profit. Yes, in hindsight, it's easy to see this, but again, when I go through my trades, we'll go back to these days, which you can see is from, is this a week? Whatever. From March 13th all the way up until, well, this is a weekend, but to that Friday, the 21st. Because I know I took a lot of trades during this, and I know I'm still 100% on my account, so, you know, we'll go off of that. But that's the three parts to where I'll consider taking my trades. So here's the most recent fair value gap. It also hit one of my lines, which it was a 50% retracement zone area, and, you know, a little bit over a quarter, 0.382 retracement zone, which I know a lot of scalpers, they only care about these two. Me, as a somewhat of a swing trader background, I necessarily care about these yellow lines. So my real buy zone would be right here, which for a lot of people, especially for scalping, this is way too big. But my, you know, monthly trades, all this is my buy zone. So I'm still learning to scalp. That's why I leave all these lines, because I know technically, even if I did get in right here, which you're not gonna really like this, but I'll put my stop down here, right below the lowest low outside of my big retracement zone. And then therefore, I mean, even right here, this is kind of not bad, you know, 0.72, so less than 1-to-1, but I'll take it to the, probably about right here. That's just scalping, barely a 1-to-1. Really, my swing trading, I'll go back up to the most recent high, and that would be my trade if I can hold it, you know, for longer than 2 weeks. So yeah, that's the key levels. That's how I mark them, and we'll go through it again. Let's find another example. So this would have been a good short, but let's say I don't think I took this trade, or maybe I did, but let's look at it. Let's say I'm flying blind. That means I already would have naturally considered this a good supply zone, because, you know, it's the ultimate low, or not the ultimate, but mid low, to where price hasn't returned to in what, since January, and we're in March. So the past pretty much 3 months, price hasn't returned here, and this was probably like a halfway point, which I would already have this on my chart. So I'll take this swing low, and technically the swing high would have been right here. This is the fair value gap that I would have done it off of. And then I also, on mine, I like to mark out right here. You see, I already have saved golden ratio. So it turns yellow. Excuse me. A bullish fair value gap. And that's it. I just leave this on until it comes back and get tested. Which you can see it has multiple times, and I can guarantee you I put a buy order there. And then I target, so let's say we're just on this candle. I target the next previous high, which would, for me, for moving down, it would be where we can come back to test it right here. So even this line right here, that's already marked out. So one of these two areas, so this whole area is where I'll put my take profit, assuming I'm getting in somewhere in this area on a smaller time frame. Remember, it's only 4 hour. So once I mark my levels, and what I say was going off of, let me mark the candle. So over here, get that one. So essentially we're going off this candle right here. So I see it's getting close to all my lines. So here's my first initial line. I still wouldn't even be taking no trade. I probably even walked away from the computer. Well, what time is it? So this is market open. So yeah, market went down all the way up until noon. I bet you I didn't take no trade this day, just because I know I don't care to short. I definitely wouldn't have, but I only care about the fair value gaps, remember, on the higher time frames. I don't necessarily care to mark them on the 5 minute unless I'm in an active trade and I'm like just trying to keep track of reversals and if it's gonna reverse them. Yeah, you see how big this is on a 5 minute? Map to the chart. Hello. Well, either way, don't know why it's not populating. Yeah, that's how I mark my levels. So I don't know what happened right there, but essentially, so if you was going off this, move, which I picked this one just because it's a big move down and probably where I would have got stopped out if I even did take a trade. But you want to go back, to wherever that supply zone could be for you. For me, it's right here because this is almost probably a midway between where it hasn't retraced in the past few months. So this would have been a good supply zone for me. And I would have had this on until forever, until it finally reaches it and crosses. Then I'll leave it on and see if it's going to become a resistance. Then finally, when price moves too far away from it, I'll delete it from my chart. So the reason why I can confidently say I didn't take a trade is because it never even got down to this supply zone, let alone where my marks are. Because remember, for me, it has to be a good supply zone, which means it has to reach any one of my retracement zones and it has to be near a fair value gap on the higher time frame. So either the hourly or the 4 hour, which you can see still on the hourly. For me, there's no fair value gaps. Well, there's one right here. Here we go. We found one. Which is a bullish one. So let's use this. Not the 4 hour. So 4 hour might be too big for some of y'all, but let's go off this one. So here's your fair value gap. I'll do my retracement zone. So to the swing high. And we learned about swing lows and swing highs. So that's where I got these numbers from. And obviously you can pause the video and see what zones I'm using. So yeah, it's in my zone area, supply zone. Price has a hit. Oh, yeah, I guess. Yeah, okay. Price, played around in this area, so I'll consider it a good support and resistance zone. It hit a fair value gap and it's within my line. So I'm pretty sure I probably even took a trade right here back in the beginning of February. And you remember for me, my stop loss, well, this would be the lowest low below my last buy zone. And then see what that is. So that's a 1-to-1 right there. So yeah, this is probably one of my trades I did take. And that's how I do it. So you can see the price still respects it. Like even right here, I'll probably, you know, maybe if I'm scalping, look to take a trade here 2 days later. But if you're a scalper, I would suggest doing this, you know, probably from the 15-minute. Let me see. So let's go from today. So let's say you're marking it up for Monday. That fair value gap, you know, most recent swing low and the most recent swing high. I mean, technically you can do these two. So we'll do both of them. And then I'll consider that a good zone support and resistance. And then this right now, I'll just consider it a low. Now on a bigger time frame, maybe this is just nothing. But on this 15-minute, it's a good supply zone. And then we have the more recent one right here. And you can see right there, respected it. That's what I'm looking at. I'm looking at this right here. Now let's do the swing. So and there you go. So I see my retracement zones. To me, this is the better buy zone right here. Let me make that bigger. So hit my zones, and here's a big fair value gap because we're on a 15-minute. Now we can switch down to 5-minute, or even if you're doing that, you can do it on 1 minute and take a real good scalp. Yeah, because look, fair value gap, fair value gap, fair value gap. So on the 1 minute, this is 3 different fair value gaps. So you can go ahead and just even do this. See, this works on all time frames. And then you'll do it again. So yeah, so it's all my markers. And then again, if I was to take a buy, it'll be somewhere around here. The most recent low past this 786 retracement zone, back up to, like, this magnet killing me, back up to this high. So it's almost a 2-to-1. So if it does, I might take this trade on Monday. If it does happen, yeah. And then make sure your risk, whatever this number amount could be, that's to you. It can be risking $50 to make $165. So it's up to you. The number don't matter to me. That's whatever your wallet is. So boom, to me, that's key levels. Talked about the fair value gaps and actually talked about my golden zone, which is a Fibonacci retracement. And that's pretty much it. And to be honest with you, when I put it all together, that's me putting it all together too. That's exactly what I look for when I'm taking a trade. Now, remember, you can do this on the sell side. I like to just invert and mark it all up again, but just knowing when you're saying, oh, I'm gonna take a buy here, you're really saying you're gonna take a sell here, because if you're waiting for a price to break from here, you're really waiting for a price to break down. So when I revert it, see, break down from here. So that's a little trick if you didn't, know about that or whatever. So that's that part. Let me get it ready to go to my platform where I take my trades. 1 second. So here's the trading platform I use, Quant Tower. You can see my trades right here. You can see it's already marked up. But this was just on Friday. Well, the 19th through the Friday. So the week. Took a trade right here. You can see all my buy orders. Sell right here. Got into another trade, which was that night. Sales up here. Got into another trade. Sell up here. And then Friday, got into a quick scalp. And then another trade and sell right here. Let me see if I can zoom in. It might look weird on the 5 minute. Oh, maybe not. Okay, so these two trades right here. Quickest scalp ever. I think it was like 3 ticks just because I don't know what happened that morning. Probably my daughter, and I didn't want to be in a trade too long, so got in, got out real quick. And then, oh, somebody here. 1 second. Oh, never mind. Forget it. I ain't gonna answer it. But you can see it retraced back to one of my buy levels because it's one of my retracement zones. I'll wait to see what was gonna happen because remember I'm looking on bigger time frames, and I can tell you right now why I took this one because there's a fair value gap right here, and let me see if it hit one of my zones. Oops. Yep. Right at, well, almost right at it. Right at my 3.8 retracement zone. 1 sec. So I saw that the trend was already going to be heading upwards because I was looking on a bigger time frame. So got in. You remember, so most people don't do this, but my stop, I can guarantee you, was, remember, the lowest low under here. So it had to have been right here. And let's just go ahead and mark that red. Boom. And then I always try to go back to the high, resistance point, which is already marked out. This line up here. You see? Well, I don't know how I got out at the very top, so I must have took this zone right here. Yeah. And I always put the take profit just not right at it, but a little bit before it, so I can front run. And let me see. Yeah, that was a 0.3% move. So remember earlier where I said, oh, that was a 0.25% move. This is a 0.3. So I wasn't lying when I say like those be good scalps because the futures contracts are highly leveraged. So that was that trade. And then I didn't take no trades for the rest of the day, even though when it retraced back to this, I must have not been looking because that hits my criteria perfectly, which you can see. So these retracement zones to me are no joke. I know I took those other trades. Was it 17th? Oh, here we go. I think I was right in this one. So for the same thing, which we'll just go off my previous zones, you can see came down to my golden retracement zone, it got rejected, flew past it, came back down to retest it. Yeah, see, the buy orders look all funky on the 5 minute. That's how you know I took them on a higher time frame. It's probably like the hourly or something. I wonder why the chart's all jacked up. Chart refreshing. Interesting. I don't know why my buy orders are all skewed, but same thing. Get in. Look at the hiccups. So you can see this is a good resistance zone. I know I probably got in on this candle. Like these probably should be shifted over to this candle right here, or even this candle. Most likely these two candles. But I can explain it to you. So I know I got in on the retest back around here, and my stop loss is probably somewhere right up under here where this red line already is. That's why it's red anyway, because I know that's where we put my stop loss. So same thing, 786. These are my two favorite zones. Below here is where I'll put my stop loss, and then these are my scalp zones. So got in my favorite zone, got out at my scalp zone. I don't know how else to explain it to you. Pretty simple. And you already know what I look for before I even get in. Come back to my retracement zones, which technically I don't even need a fair value gap if it's coming down this low. But I look for a fair value gap. I see if it's a good resistance or a supply zone, which you can definitely see has been played with around in this area. And then when I put in my buy order, put my stop loss below here, and then I'll put my take profits anywhere on this area. Which you can see I even front run it again, because if you look, right here was another good zone, which I can see I probably had 3 take profits. But got in, got out, got in, got out, and got out for the final time. And then I think this was overnight session 13. Yeah, so this is right after market closed. Yeah, I probably was in drawdown for a lot, so I don't think I followed my rules here. I don't know what happened, but it looks like I got in and I was in profit, so I probably should have took TP right there, but it says I didn't take it till over here. I wonder if this is messed up again. Anyways, whether it's messed up or not, it looks like I took a big drawdown, so technically I would have got stopped out a long time ago, like right in this area. Interesting. But let me go to the broker. You can see my trades on there. So all right, so here's the trading view chart, or not trading view, my Top Step account, to which I was taking those trades that I just showed you on Quant Tower. So it's a funded account, you know, had it since March 3rd, which I don't know how this actually works, but this is the only account I ever had. I only bought one time and just kept it. So this is only like, I haven't bought any since this one, and only this one. So as you can see, I take my time. Not only that, in one, it's like, how many evals you gonna need? Just buy one eval, pass it, and now you got one funded, and use this one funded to, you know, buy more. So had it since March 3rd, which is the day I got funded. It's been 11 days since then. Winning percentage is 100%, like I told you earlier. And yeah, so if you guys don't know what these accounts are, basically there's these prop firms that, you know, once they put you through the evals, they'll give you a funded account for you to trade, which they say they go up to like $50,000, $150,000. But to me, the only thing that matters is the amount that they give you to lose. Consider that the amount that you have to trade with. So this one is what I think, 2,000. Yeah, so they essentially give me $2,000. So I trade like if only $2,000 is in here, so I don't go too big. Maybe 1 to 3 micro contracts at that. So far, I've only been using 1 micro contract just because I want to do my next video of me taking some money out. And then after that, I'll show you like the bigger accounts and how to trade, you know, bigger contracts, more like minis. But I don't do it right now, so I'm not gonna make no video of me doing it, because for what? If I'm not doing it, well, I'm gonna tell you to do it. So yeah, so going by this metric, which is almost like $100 a day, might take me another 2 weeks before I'm doing a video of me getting paid out. But hopefully starting this Monday, I can just do daily videos of the trades that I took and just go from there. But here's the account. Yeah, you can see right here it's funded, if you know what this means. Is there any other way that shows you? Yeah, I don't know. Yeah, it's a funded account though. But yeah, that's it. So hopefully you understand everything. I'll make a bunch of shorter videos on everything we just talked about, but if you want to just skip towards that last part of the video where I showed you how to put it all together, because you know most of this and you just want to see how other people trade, then by all means go off that. But come Monday, you know, we'll just take it day by day, and I can do something daily, and they might just be quick 2-3 minute videos of me going through my thought process of my trades I've taken. And something that I am looking to do is, where is it? So I know right now I got a Kick account, so I have gone live, but I ain't got no followers or anything, so there's really no point to me to go live. But I guess I can just start going live just until I start getting them. But here's where I'll go live, and then I'll post all my replays and stuff on YouTube. I could go live on YouTube, but right now I like Kick. Maybe I'll do YouTube and Kick, but yeah, that's about it, man. Thanks.
We left it all, I will leave it all in yesterday. Everything